Hey guys, John.Hunter, your mortgage hunter, coming back again with another weekly rate update. This one for January 31st, Friday. So, we're 2 weeks into Trump's presidency, not even, and there is no shortage of news and drama happening on financial markets, politically speaking in general. I'm sure if you're not living under a rock, you've heard all about it. So, the Fed met this week, and they have decided to sit on the sidelines for now and kind of have a wait and see attitude when it comes to the Fed rate cuts. This is a little break, 3 cuts in a row. They take a little break this month. So 30-year fixed rate, we are averaging somewhere between 6.625 and 7%. 15 years, about 6 1/8 to about 6.625. FHA, 6.5 to about 6.875. VA, 6 1/4, 6.875. And down payment assistance anywhere on the low end of 6.625 to about 7.75, depending on so many factors. All of these rates depend on rate or credit score, loan to value, loan type, property type, duration of the loan, income, whether you're a first-time home buyer. So many variables that go in to determine the rate for everybody that it's very unique and individual in a lot of cases. So if you have any questions, you want to know where you fit in that, just let me know. These are down a little bit from last week, which we're coming off like a 1-year high. Rates really dropped in September. They bumped back up because of inflation and shelter and other issues. A lot of drama going on. Now we've stabilized. We're a little bit lower off those highs. Hopefully that trend continues. Really, one of the big news that came out today that I've been watching, PPI, if you've heard any of my other commentaries on rates, PPI is the Fed's favorite inflation indicator. Came in really where expected today. Inflation running annually at about 2.2%, and their goal is 2%. So we're getting there. We're really close. One of the other things that came out this week is shelter expenses. Basically rent, mortgages, what average people are paying. That has been one of the most sticky aspects of the inflation picture that the Fed has been watching, and that is one of the slowest to react. So here this month, it appears that we're really trending down on that. So nationally, it's rents are down 2.4% overall. Those numbers will start showing up in these inflation numbers pretty quick. And when that happens, we're going to get to and maybe even be below the 2% goal here when shelter starts getting factored in. This is my belief, and I do think that that's going to start happening here in the next 30 days or so. That's going to put further downward pressure on rates. So, the Fed's mandate is all about 2% and maximizing employment. So that's actually the second picture that I'm watching really closely here is employment. A lot of the employment numbers, the strength that's been coming out over the last year or so has been government hiring. There's been a lot of federal jobs that have been going nuts, right? If you're paying attention to the news at all, there is now a moratorium on hiring. They're doing the opposite. They sent 2 million federal employees a offer to resign and get full benefits and full pay through September. So there's going to be some big changes to the employment numbers that are coming out here in the next couple weeks. And I think that's going to put a real downward pressure on rates as well. So one last thing I want to touch on, because it's been a little while since I've done one of these updates. So I know it's a lot of information, but one thing I've been watching really closely is the inverted rate curve. I've talked about this before. It is always is a sign of an upcoming and pending recession. It's never been wrong so far. Well, that inversion actually flipped back. So it's no longer inverted recently. This is as of real recently. That after an inversion usually means that the recession is much closer. When it inverts, it's usually 18 to 24 months away. Well, it inverted 2 years ago, right? And it's gotten really bad last year, and now it's no longer inverted. So that usually means that we're closer than not on rates dropping. And what is another aspect of that pattern that we've seen over and over again? And it's what they call a black swan event. And what is a black swan event? It is unexpected, it is severe, and on hindsight, people look back on it and say, well, it was completely predictable, right? What are examples of that? COVID, right? A lot of people were like, well, of course it was going to happen. They've been talking about it for years, right? 9/11, same kind of thing. So nobody's really talking about it other than, some people have brought up, like, what is the next one, right? And I do believe it's around the corner. I wish I had that crystal ball. If I did, I'd be on a beach, but I do believe it's coming, and it's may or may not have something to do with the new presidency. We shall see. But I do believe there's a lot of great inflation-reducing policies that are being put in place, and I have high hopes. So, regardless of your political beliefs, the reality is that, you know what, I'm rooting for the American people. I'm rooting for a better life for my children. And I really hope, just like I hope Biden was successful, I hope Trump is too, for very selfish reasons. I want my children to have a better future than I did. So that's it, guys. I'm going to keep watching this. I'm going to be coming back every week with another rate update. I hope you guys enjoy these, get a little bit out of it, a little bit of prediction. So I think the rates are going to come down, or the pressure is down right now, or the trend is, at least the short term. So we hopefully have seen the highs, and we're only going to have better things going here in the spring. Things are starting to pick up on the listing side. So if you're looking for a home, you know, hey, keep the faith, keep looking. That home that is yours probably isn't on the market yet, but it will be soon. So be ready. If you need anything mortgage related, guys, I'm your guy. So give me a call. John Hunter, your mortgage guy. I will talk to you soon. Bye-bye.